Coreweave stock is trading at just under $135, down from $155 in July, after crashing below $90 just a few weeks ago. And the question is, can Coreweave still be a long-term winner, or is the hype fading fast? Some analysts are calling it a once-in-a-generation AI play. I say this is where it starts to get interesting. Coreweave just locked in $22.4 billion in total contracts with OpenAI. That's no typo, 22 billion. And Meta, they've thrown in another 14.2 billion to build its own AI infrastructure. And the real kicker is NVIDIA. Their investment in CoreWeave is bigger than their entire stake in all 5 of its other AI bets combined. That kind of conviction from NVIDIA doesn't just happen by accident. It means someone inside the AI supply chain sees CoreWeave as critical. And yet, the stock's still down over 27% from its highs. So what gives? Well, there's one specific signal I'm watching that could explain everything, and hardly anyone's talking about it. If I'm right, it could tell us whether CoreWeave becomes the next NVIDIA or the next cautionary tale. My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I'm here to break down the numbers so retail investors like you and me can make smarter, more confident decisions with our money. In this video, I'm going to dive deep into what's really driving CoreWeave's valuation, the catalysts that matter, the hidden risks that no one's pricing in, and how I'm thinking about this stock long term. So with all that out of the way, let's get into it. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. CoreWeave was founded back in 2017, and today they're a cloud computing provider with a sharp focus on artificial intelligence and large language models, the LLMs, right, that we use every day. It brands itself as an AI hyperscaler, highlighting its focus on speed and scale that caters to its clients with a wide variety of AI needs. That means when demand spikes for AI compute, CoreWeave doesn't wait weeks. It scales instantly. Thanks to priority access to NVIDIA's most advanced chips, which are designed to handle those heavy AI workloads, CoreWeave delivers on-demand GPU and CPU instances straight from its own cloud network. The company's data centers are widely used across 3 major categories. First is its AI model training, where raw compute is critical. Then we have AI inference, and this is where applications move from lab to production. And lastly, rendering and VFX. This is powered by its Conductor platform, which has become a staple in media and entertainment pipelines. So you could say that CoreWeave isn't just powering AI, it's quietly becoming the backbone for entire industries. And that brings us to the real question. What is happening with the stock? Well, the last time I covered CoreWeave was way back in July of 2025, and it was trading around $155. Today, CoreWeave stock has seen some massive volatility since then, falling briefly below $90 at the start of September. It's the same case when you zoom out, right? With the stock trading between $33.51 and $187 in the last 6 months. But today, CoreWeave have seen some recovery in early September and is now trading at $134.79 at the time of recording. That is a wild ride. And volatility like that usually just means one thing. The market is trying to price in massive uncertainty. But as an investor, looking past the price action is only part of the story. You also need to consider what drove the stock to this point and what can drive it further. And this is something we talk often about in my Discord channel, because the real edge isn't in what's happened, it's spotting what comes next. So to answer that, let's talk about CoreWeave's growth catalysts. First, this is big news, right? It's the most recent news. CoreWeave's recently expanded partnership with OpenAI. If you remember, the two companies inked an $11.9 billion agreement back in March. It was pretty exciting. Then it was expanded by another $4 billion in May. Fast forward to the end of September, just a few weeks ago, and OpenAI expanded the agreement by another $6.5 billion, bringing its total contract value with CoreWeave to $22.4 billion. That's not just a deal, that's validation from one of the most powerful players in the entire AI ecosystem. And when one of the biggest names in AI invests in your partnership, you know you're doing something right. It also doesn't hurt that these public agreements tend to attract, the right kind of investor attention. Now, speaking of agreements, Meta has partnered with CoreWeave as well to ramp up their own infrastructure to support its broad push into generative AI. The price tag, $14.2 billion. And in a market where attention equals capital, that's quite a serious advantage, wouldn't you say? NVIDIA, of course, the leading name in AI, has invested in 6 different tech companies as of June 30th, 2025. These are Applied Digital, ARM Holdings, Nebius, Recursion Pharma, WeRide, and of course, CoreWeave. And the kicker? Out of the 6, NVIDIA's CoreWeave investment has the highest dollar value. And by highest, I mean higher than all the 5 combined at 3.96 billion. That's kind of like having the MVP of AI betting the biggest stack on one player. Now, this is a tangent, but I think it's funny that NVIDIA's investment in CoreWeave is so big that the two columns for dollar value and shares overlap with each other in NVIDIA's 13F filings. In case you're unfamiliar, the 13F is the report to the SEC that discloses the institutional investment holding of certain entities. But let's get back to the point. All these partnerships support what many CoreWeave investors are already thinking. The company is positioning itself as a key player in AI infrastructure. And if AI adoption keeps scaling the way it has been, well, that demand can go parabolic. But of course, that's just one side of the coin, right? CoreWeave faces some very real risks, which I'll cover in a future video, so you won't want to miss it. So with all that out of the way, is CoreWeave stock a buy today? Well, to answer that, let's look at what the experts say. A consensus among 27 analysts rate the stock a moderate buy. And what's more impressive here is that the scores have been increasing for the last 3 months. Now, the last time I covered CoreWeave, the high target price was $185. Today, it's an even 200 bucks. So you could say that Wall Street is growing bullish on CoreWeave, and I tend to agree. The company offers an exciting prospect, right? It's a new player in the space that's already getting the attention of some of the biggest companies in tech and AI. And when Wall Street sentiment, big tech partnerships and institutional money all align, well, you got to admit something is brewing here. So, yes, I think it's a long term play, but I do have to acknowledge the fact that execution risk is still present. But what do you think? Do you agree? Do you think that there's still a lot of questions around the company's future? Let me know in the comments below. And while you're there, if you found this video helpful, do like and subscribe. It'll help others find this video. It'll help the channel. And of course, you won't miss out on any of my future deep dives. Well, that's it for me today in this video. Thank you so much for watching, and I'll see you next time.